Okay. Right. So I don't have what we call it. I don't have a soft copy of this question paper. This is October, November 2021. The reason why I did not continue with January, February 2025 question paper is because I wanted us to deal with questions that are relating to revenue and receipt cycle. I'm not saying that these are all the questions that can be asked in relation to revenue and receipt cycle, but these are the ones I have found so far. On revision times, we are going to look at other questions that are asked differently from the one that we are dealing with now. Right. So once we have dealt with this account receivable question, at least we have done a question. At least now we can see what is a class of transaction, what is uh, an account balance, right? And how do we formulate substantive procedures on both of these? That is why I was saying on revenue and receipt cycle, we need to understand the test of controls that we need to perform on a sale transaction. That is a class of transaction. We need to understand substantive procedures that we can perform also on a sale transaction. That is a class of transaction. For example, in our previous class, we looked at how do we call it? Substantive procedures on the accuracy and occurrence of the sale transaction. Now we are looking. We need also to look at the substantive procedures that we need to look that we need to formulate or perform when we are looking at an account balance that is revenue, that is account receivables. And this is one of the account balances that we find in the revenue receipt cycle, because goods can be sold or services can be sold on credit. Then when goods and services are sold on credit, we are creating accounts receivables or debtors. These are people who have passed the credit conditions of the company of our client. So we record them as receivables or debtors. And there are conditions. I understand that from, I think it's FAC or on ratios, right? We understand that these are the conditions that should be there or that should be present when we are selling our products on credit. Some, depending on the credit limit of each client or of each customer, let's say customer, right? Depending on the credit limit of each customer, all customers can be asked to pay within certain amount of days, maybe 30 days, 60 days, 90 days, and 120 days. And that this is where now we will result in having the issue of allowance for doubtful debts or allowance for bad debt. Because once we give them on credit, once we give our customers on credit, doesn't mean that all the debts are going to be recovered. Some might not be recovered because of different conditions, right? That is the case. So this is one of the accounts. This is one of the what do we call it, of an account balance that we have on the revenue and receipt cycle, right? Then after that, we also need to look at the issue of substantive procedures. I have said this. You can perform substantive procedures, formulate and perform substantive procedures on cash, because some customers can pay on cash. We can also perform and formulate substantive procedures on sales that have been made via the bank or EFTs, right? Then it will now result in the issue of substantive procedures that can be made using the what? The audit software. Because you may find out that some data or the data what can you call it? The data system, or let's not say the data system, but the system of our client as auditors can be automated, meaning that the data's accounts, the general ledgers and the control accounts can be in form of an automated system. Then we can be asked to perform substantive procedures using computerized audit techniques, right? Computerized audit techniques. Those are cards. So in this case, we are not dealing with the manual system. We are dealing with the automated system of the client. So we need also to understand that aspect, because you can be asked that using cards. They call them computer-assisted audit techniques. I'm sorry about the term. So they call them computer-assisted audit techniques. So they can ask us now how we are going to perform or formulate substantive audit procedures using cards on the trade receivable balance or account receivable balance. Once we do this, we are done with the revenue and receipt cycle, meaning we will be able to answer any question that might be asking us anything about the revenue and receipt cycle. So from there, we will be going to the acquisitions and payment cycle. What are we talking about? This is a structure in business, right? All the functional businesses, they have this structure, meaning that a business can make sales, right? That is the revenue and receipt cycle, and receipt any transaction that they have received from their customers. That's the revenue and receipt cycle, meaning that a business can make sales through their products or services, right? That is why we call it the revenue and receipt cycle, right? There's also another function where a business needs to pay something, need to buy something. In fact, a business needs to buy and pay. That is now the revenue, and so that is now the acquisition and payment cycle, right? So we need now to understand what are the test of controls. How do we formulate the test of controls? We're going to. I have also another question paper that got two questions, which are asking about the test of controls in the acquisition and payment cycle, and it's asking about the substantive procedures in the acquisitions and payment cycle. So once we deal with those two questions, that is in our next class, at least we will see how best we can formulate now test of controls and substantive procedures in the payments, in the acquisition and payment cycle. Right. So for now, let's deal with let's now deal with this question with regards to the revenue and the receipt cycle about the accounts payable. And other thing on the acquisition and payment cycle, remember that when we are buying and making payments to our suppliers, all right, remember we also buy these goods or services on credit, meaning we are generating creditors. Right? So the substantive procedures that we will be asked to perform or to formulate in the acquisition and payment cycle, we are asked to formulate and perform these substantive procedures on the creditors. maybe the valuation of creditors, the presentation of creditors. So you see how the issue of accessions affect uh, the substantive procedures that we will be formulating or performing, because we are responding to the risk of misstatement at accession level. So we also deal with the accessions that will relate to the issue of our creditors. Okay, we will see it in our next session. So for today, we are going to deal with the accounts receivable balance. Okay. I only managed to take a picture. I only managed to scan this page. You know? So already I take down the question. I have the question. This is question 4 of October, November 2021. Question paper, which says, with reference to the accounts receivable information, formulate the substantive audit procedures that you would perform to verify that the accounts receivable balance, accounts receivable are debtors, is valid correctly at year end. 19 marks, communication skills, clarity of expression. So you can see that the question that asks test of controls and the question that asks substantive procedures is not a question that we can waste time on. And you see that these are the questions that carry a lot of marks. So we should not waste much of our time, right? Because we need to understand our assertions that if we are talking of accuracy, what are we talking about? If we are talking of occurrence, what are we talking about? If we're talking of cut off, what are we talking about? If we're talking presentation, what are we talking about? If we're talking allocation, valuation, what are we talking about? Classification, what are we talking about? Rights and obligations, what are we talking about? Right. Because whenever you are asked to formulate substantive procedures, you are going to look, or we are going to be dealing with an assertion. That is why we are saying substantive procedures is to respond to risk of material misstatement at assertion level, meaning that whenever an assertion or whenever the demands of an assertion or the expectations of an assertion is not been met, meaning that there will be a risk of material misstatement. That is why we perform planned further and other audit procedures. We'll be auditing the assertions. Okay. So this is the question. We are looking at the evaluation. We can also ask it to look at what do you call it? The presentation, right, of the cutoff of what of this account receivable balance. Okay. Now I'm going to read the question. Let me just deal with this question. Then next time we'll be dealing with the acquisition and payment cycle. But during your revision, don't forget to look on substantive procedures that can be performed on cash, that can be performed on EFTs. The substantive procedures that can be performed using computer-assisted audit techniques, because now most of our clients as auditors, they have automated systems. So if we have that, or if the client has the what we call it, that system, we can use our audit software to deal with this to deal with these aspects. Then it will be easy for us. Okay. Okay. So let us read our paragraph. Then we answer our questions. Now they are saying accounts receivable required number 4. This is question 4. Sales are made on cash or credit. Each customer should complete a customer registration form in order for their profiles to be loaded on the system. Registration forms for customers buying on credit should also be accompanied by a credit application. Credit is only approved after a successful credit background check has been made or has been done, after which a credit limit and specific credit terms are set for each customer. Accounts due should be settled within a 30-day period, and if not paid within 60 days, the customers are handed over to debt collectors. The following age analysis have been obtained at year end, right? So this is the age analysis. By age analysis, you understand this from accounts that if a customer is asked to pay in 30 days, they fail, it means that it's going to be more than these 60 days until the account is settled, all right? If not settled, then that is the issue of debt collectors can get in, or maybe we can write off that data. So let's deal with total closing balance. Sorry, let's okay. Sorry about that. So this is our age analysis. We have total closing balance of all debtors or of the account receivable. We have 6,500,000. The current, we have the current for the finance. Let's just say maybe we have not reached 30 days yet. It's 3,185,000. Ones who are more than 30 days, it's 1,314,800. Those who are more than 60 days, 455,000. Those who are 180, 200, 180,200. More than 90, sorry, those more than 90 days is 180,200. Those who are more than 120 days, they are 1,365,000. Then percentage of total debtors. If we add all this, it's going to this percentage is going to be 100% of 6,500,000. So on the current, the ones we have not reached any agreed period is 49%. More than 30 days, 20%. More than 60 days, 7%. More than 90 days, 3%. And more than 120 days, 21%. Right. Now they are saying an allowance for credit losses is made against a customer if the account has not been settled within 90 days. Okay. Included in the outstanding balance for more than 120 days are debtors that have entered into business rescue proceedings. I think you understand this. And some who have been liquidated. Okay. So when you are under business proceeding, it's like this is where your business being taken over by certain practitioners who have skills of how to manage the business. In fact, like what happened to the South African Airways. Okay, so a business will be failing to generate revenue and going some consequences, then can be handed over to the practitioners who can deal with it, and they will run it until the business will be able to function. They will give it back to their actual owners. And by liquidation, we understand that this is where the business, our liabilities will be more than our assets. Okay, so you obtain the account receivable list. You obtain the account receivable list with the amount due by each debtor. Accounts receivable control account and positive data confirmation. Positive data confirmation. So that is the issue of. Well, I will talk about this because when we are dealing with what do we get? When we are dealing with receivable balance or data, there are sections that we need to understand. Okay, so when they mention that you obtain the account receivable list with the amount due by each data, account receivable control account, and positive data confirmation letters. This is positive, which meaning that positive data confirmation letters mean that responses received back from the data for the year ended 30 September 2021. So what they will be doing, the data will be confirming because that is data secularization, right? That is with regards to the existence assertion of the account receivables or account balance. So we need, when we are dealing with the existence assertion, we need to look at data secularization. On data secularization, that's where we need to deal with a positive data confirmation or negative data confirmation. So meaning positive data confirmation, this is where the data will be confirming that the amounts that you or their company has with regards to what they are owing to the client or to the supplier are corresponding, or maybe there will be, yes, let's say if it is positive, it means that they are corresponding. If it is negative, the negative data confirmation, meaning that the balances the company has and the customer has are not corresponding. Okay, so you have already performed all the applicable analytical procedures on the data's account. So now let's formulate the answer. Yeah, so like this, I will advise you to make use of your textbook mostly, because in audit, mostly as far as I can see, I'm not saying that notes cannot work. Notes can work, but we need the textbook. Once we have explained this in class, when you get it into your textbook, it's not going to be difficult. Okay. Right. So here, the assertion that we are asked to deal with is evaluation. Okay. So mostly when you are dealing with the evaluation assertion, especially on trade receivables, on data, we are asked to deal, or we will be also dealing with the issue of accuracy. Because something that is correctly or appropriately valued, it means that that aspect is accurate. So that is why if you go to your textbook, you will see that they will tell you to don't get surprised if you make use of your textbook. You see that they will be saying assertion, then they say accuracy, valuation, and allocation. Because when we are dealing with the data, firstly, we are going to deal with the gross amount of data. Then after dealing with the gross amount of data, we are going to deal with, what do we call it? Allowance for bad debts, or allowance for doubtful debts. Right. So we are going to deal with two sections. We're going to deal with allowance for doubtful debts or bad debts and gross amount. Right. So we're not saying gross amount. This is the gross amount. Total closing balance. 6,500,000. This is our gross amount of the debtors. Then, if you look at it, they've also said an allowance for credit losses, meaning that another section we're going to deal with procedures dealing with allowance for bad debts or allowance for doubtful debts. Okay, so let's start dealing with gross amount. We should be quick. Firstly, the debtors control account in the general ledger. If you have questions, you can tell me in the general ledger. Be reviewed for unusual entries. For instance, debits arising from journal entries. At year end. And it should be followed up. The debtors control account in the general ledger should be reviewed for unusual entries. For instance, debits arising from journal entries at year end and and follow the up. Okay. Number two, the total on the list of data balances it should be the trace, the individual data. Um, sorry, I think I made a mistake. The total on the list of individual, the data total on the list, the total on the list of the total on the list of individual data. Individual data should be trained. The trace to the individual data accounts to the general ledger. The trial balance. And then, and the amounts, um, included on the list here it should be merged. On the list of data's balances be traced to the individual accounts, the data's ledger. Right. Now, if the comparison of the data's list if the comparison of the data's list, okay, let's change this. If the comparison of the data's list to the balances in the data's control, the balances in the data's control, the control account. Reveals that they are reconciling items. Auditor should perform costs. I think we understand this from an accounting concept. Test also should test the reconciliation. Reconciliation logic, and also follow up of reconciling items. Right. Again, another procedure. Tax list to be revealed with a hand. Okay, yeah. You can speak.
Okay, can you hear me?
Yeah, but
Okay, I was saying that can you maybe try to in your sentences just write the assertion, maybe in bracket of the assertion that you are responding to using based on this answers. Just maybe on the last part, just in an assertion just for simple
for simple understanding.
please.
Right. So yeah, your question is very good, man. It's a good question. It's a good question, but yeah, let me answer that question. It's a good question. Right. We say that when we are performing substantive procedures, we are performing substantive procedures to respond to risks of material misstatement at assertion level. Right. Now, when we are asked to perform substantive procedures on a class of transaction or on an account balance or on disclosure, it might be maybe going concern. And when they're asking us with regard to a certain assertion. It is possible that not just say in general, if we look at the content we have in auditing, when we are performing substantive procedures, for example, on trade receivable balance, like in this case, what we need to do is, or what is available or applicable in general, is that these substantive procedures should be performed. Let's say in case we are on the ground, practically, we are dealing with an audit in practical terms. Because now this is a question paper. This is just a question paper from an institution. Now. So they cannot ask us to perform substantive procedures on the existence of the trade receivable balance. They cannot ask us to perform substantive procedures on rights, right? On what do we call it? On accuracy, valuation, something like that. They choose an assertion that they need us to perform substantive procedures on because it's an examination. So in this case, the question has already told us which assertion are we auditing, or we are performing these substantive procedures on which assertion. So meaning that all the substantive procedures that we are going to perform, we are performing them to see or to verify if the account receivable balance is valued correctly, meaning that all the procedures that we are taking down, they are relating to the valuation assertion of the account receivable balance. They did not ask us to perform substantive procedures in relation to the rights of the account receivable balance, the existence of the account receivable balance. They asked us to perform substantive procedures in relation to the valuation of the account receivable balance. That is the issue, right? So differentiate this now when we are asked to deal, for example, that common question that we will be asked to perform, what do we call them, or to maybe identify risks of material misstatement at assertion level. That is where we will now need to explain or describe the risk of material misstatement at assertion level, meaning that we will be explaining or describing how the assertion can be affected. Then after we explain that how the assertion is going to be affected, then now we need to identify which assertion has been or is going to be affected or has been affected. So that is the difference. So when we are dealing with substantive procedures, they already tell us formulate substantive procedures on the valuation, on the presentation, on the existence, on the rights and obligations of this account balance or this class of transaction. So they've already mentioned to us. So whatever we are going to perform, whatever procedure that we are going to formulate is in relation or should be in relation to the mentioned assertion. So don't confuse with assertions. Assertion is just an issue of the initiation of transaction only. Because as businesses, we are into buying and selling. Also, we have inventory. Also, we have finance. We have to make investments. Also, we have human resources. We need to pay the workers who are working for us. So there are transactions that are going to be formulated or that are going to be initiated in all these departments, or let's say cycles. Let's say departments. The transactions that are going to be formulated there. So the issue of assertion is we need to see or to verify or to check if the initiation of these transactions, then that will result us in having account balances. At the end, we will be having disclosures. Is it done correctly? That is why we need to. And the correctness of this is not only limited to accuracy. That is why it stretches to the issue of occurrence. Because if we say accuracy, we need to make sure, okay, we made a payment, right? We made a payment for, or we have bought something. We want to buy something. Is this thing that we are buying, is this payment, is it okay? For example, maybe on the issue of paying something, or let's say buying something, we do not have to check on maybe accuracy, because obviously if we pay the wrong amount, maybe the what do we call it, that company we are buying from can see these guys, they cannot make an incorrect payment and we won't receive the good. But we need to look at if it occurred. Did this account balance okay? These things have they been occurring during the financial year? That is the issue of assertions. I'm not sure if I'm trying to answer your question appropriately. So when now we are asked to deal with substantive procedures, obviously in the question, they will tell us perform or formulate substantive procedures on this specific assertion with regards to a class of transaction or with regards to an account balance. That is an issue with this assertion. So when we are formulating this, we are sure that we are formulating substantive procedures with regards to the evaluation of accounts receivable balance. Okay, so that is it. So we don't need to mention any assertion here. So now they're saying the data list should be reviewed for credit balances.
Okay. Sorry to interject. I understand you. So the question says it does not say anything about assertion, right?
The question is specifically to the assertion.
Okay, the assertion is
okay.
sorry. Is
okay.
The question says that the verification that the accounts receivable is valued correctly at the end. So meaning that now this they are actually referring to
the balance account balance, right? Now we are coming to the assertion. Like, yeah, they are referring to the account balance, but right? Because why evaluation? Because by evaluation we are saying that that is the issue of misstatement now, because remember in our financial statements, for example, this is a what we call the financial position, yeah? The statement of financial position. We got a non-current assets. We got current assets. What do we have under current assets? Under current assets, we know that we have, and according to accounting, your accounting principles, according to their order, that is now according to their value in usual cases. So we're going to find out that a inventory may be number one. That is inventory. It's an account balance, right? Debtors or accounts receivable is another account balance. Cash and cash equivalents is an account balance. I don't know some of others. Okay, maybe right. Okay, that is the issue. So, do you know that a misstatement will arise where we are saying, in terms of misstatement, we are saying a misstatement is where the reported amount in an account balance or class of transaction or disclosure, right? The reported amount in a class of transaction or the reported amount in account balance is not the correct amount that was supposed to be recorded. For example, we can say that the amount of account receivable balance, for example, in this case, total closing balance is 6,500,000. If there is a misstatement, maybe they could have said 6 million. But for us to identify that there is a misstatement, that the actual amount that was supposed to be recorded is not the amount that is recorded in the financial statement. Whether it is a class of transaction or account balance, disclosures, just because disclosures does not constitute any figure, okay? Disclosures are not dealing with figures. We are dealing with, for example, with regards to corporate governance compliance issues, we are not dealing with figures. Okay. So we see how misstatements arises. Right. So now this question is dealing with an assertion. So valuation is okay, which means if this total is 6,500,000, we need to see, is it the correct one? Has it been valued correctly? So the issue of valuation, you usually see it in account balances. For example, maybe when you are dealing also, so we're going to deal with the issue of, when you're dealing with the issue of that issue of finance and investments, finance and investment cycle. I think that's where we'll be dealing with property and plant and equipment somewhere there. Even in production, inventory and production cycle, inventory cannot be valued correctly, meaning that the actual amount that has been that we have obtained as auditors after we have performed our procedures on the inventory balance is not the amount that has been recorded in the financial statement. That is the valuation. The value meaning that we're dealing with the amount. If something that is worth, if inventory worth 10 million, and in the financial statements we are finding that this inventory is returning that it's worth 9 million, that is an understatement. Meaning we can be asked to perform the substantive procedures with regards to the valuation of inventory. The same with accounts receivable. Look at the trick. So we need to understand how misstatements can arise. How misstatements can arise due to, remember, misstatements can arise due to fraud or error. Right. So how fraud can be performed with regards to accounts receivables. We can understate the accounts receivables. We can understate them. Meaning that why do we understate them? Because maybe we've already, or we can create fixtures, but in accounts receivable, it's very, because in accounts receivable, if we create fixtures, data is going to be the problem once that data did not pay, right? So what we can do to make fraud in accounts receivable is to understate the accounts receivable balance, meaning that we might not record some of the data that have been paying, that have been buying on credit from us, from the client as auditor. So the best way to make fraud is to understand the accounts receivable balance. That is how fraud can be made on accounts receivable. Okay, so meaning that.
Okay, so in our answers, we are actually dealing with accuracy, valuation, and allocation.
Yes, exactly. Why? Okay. Why we are now combined? The question is specifically saying. Where's the paper? Yeah, the question is specifically saying valued, valued, right? Why are we now? If you go to our textbook, it will tell you about the accuracy. Why do they combine accuracy, valuation, and allocation? Right. The allocation, I think the issue of allocation is meaning that the correct amount, right? The correct amount, meaning a correct amount has been recorded accurately. So when you talk about the issue of occurrence of allocation, we're saying the correct amount, right? The correct amount has been recorded in a proper account. Meaning if it is a sale, or if it is a cash sale that has been received via the counter, it cannot be, that amount cannot be included in the data account, because this is a cash sale. We cannot put this we cannot allocate it to a data account. Why? Because a data account, data arises when we sell goods or services on credit. So whatever that has been sold in cash should be allocated to cash sales. Whatever that has been bought on credit should be allocated to debtors. That's the issue of allocation. So meaning that, so I'm trying to explain the combination between accuracy, valuation, and allocation. Meaning that if we take a cash sale transaction and allocate it to a data, to a credit sale, which is going to make which is going to overstate the debtors account, it means that there's no proper allocation, which means that a cash sale transaction has not been allocated to a proper account. So that is why accuracy and allocation goes hand to hand. I think you can understand me that. Okay. Now what the
Yes.
issue of
Yes.
accuracy?
Thank you, sir. I
Okay.
understand. Thank you so much.
Okay. Let's look on the issue of accuracy because we're saying accuracy, evaluation, and allocation. So we said accuracy and allocation. Let's now look at accuracy and evaluation. Accuracy and evaluation. Still, if we come back on a cash sale transaction, right? If we take a cash sale transaction, then we put it in a, or let's say to a, or we allocate it to to debtors. When we are now following the documentation on all the, well, that's why we need to understand the documents that are used in each cycle. If we are doing a follow-up on all the documents that are attached on the documents that are used when we are making a credit sale or maybe a cash sale, we'll find out that there's no supporting documentation for that transaction, meaning that trade receivable balance is going to be overstated because we've we have included a cash sale transaction to a sale that has been made on credit. Then we are overstating the trade receivable balance. Then we can also that there's a link between the valuation and allocation. Because now, if we allocate a transaction or an account balance to a wrong account, it means when we are valuing that account, we are going to be including or excluding a transaction that has been made in relation to that account. So that is why our textbook say accuracy, valuation, and allocation. So meaning that whatever that is going to be correctly valued, it means it has been recorded accurately. It means that it has been allocated to the proper account. Okay, I think we are fine. Eh? So we can proceed now.
Yes. Yes, thanks.
Okay. So the data list should be reviewed for credit balance, and these should be this should be followed up and reversed if necessary. Okay. Again, make reference. You can make reference the results of any data. Make reference to the results of any data secularization. So remember, so this on this case, we are dealing with the data's account balance, and when we're dealing with the data's account balance, in this case, they say that we can, according to the question, they say that we are dealing with evaluation, and evaluation is going to hand with allocation and accuracy. Then this assertion existence, we can also that existence also we need also to master well the issue of existence when you're dealing with the data's account balance, because on existence we have a lot of things to do. On existence we have data secularization. We also have subsequent receipt testing, right? So on data secularization, that's where you see that we can have a positive positive confirmation and negative confirmation. Okay. So after we make confirmations, we need to make reference to the result of any data secularization and data secularization, and subsequent flow. So this one will also need to find a question that has been. I think I saw a question that is that has been asking about performing substantive procedures on the existence of the account receivable balance. So we need to do with subsequent testing and data secularization. Subsequent testing, yes, and data secularization. Yeah. Then secularization and subsequent follow-up. Follow-up for evidence. Evidence of data valuation. Problem. Okay. Right. So make reference to the results of any data secularization and subsequent follow-up for evidence of data valuation problems. Right. Okay. And for evidence of data valuation problems. And right. Let me say, can say this. You can do this and the data list. Just list and control account should be cast. Okay. Valuation. Data. Mention the data invoice in a foreign currency. Change the amount. And the sell. A reference to the invoice. Then from a financial institution. Exchange rates. Yes, transaction dates. And the financial year-end dates. Multiply the amount each of the two. Correct. Right. Then you say wherever there is a difference confirmed by inspection. Remember, there's a difference confirmed by inspection of the debtor's amount and the debtor's account. That the balance on the account has been calculated using financial year end. Right. That is about the gross amount of the trade. We say the gross amount of the account receivable balance, or yes, account receivable balance, or paid debts. Now, let's look on the issue of paid debts allowance. Because obviously we need to give paid debts allowance because some of the payments, let's say some of the transactions, some of the transactions or some of the credit sales might not be paid. Okay. So let's quickly look on the procedures that we will perform in relation to the paid debts allowance. I think our what do we call it? Our question is saying an allowance for credit losses is made against the customer. The account has not been settled within 90 days. And also all that information included in the outstanding balance for more than 120 days. This one are debtors that have entered into business proceedings and some who have been liquidated. Okay. So here, what are we going to do? So inquiry be made of the should be made of the methods and procedures inquiry should be made of the methods and procedures adopted by management to estimate the allowance for bad debts. Authorization the authorization procedure should be established. Authorization procedure should be established and evaluated whether it has been authorized by the credit controller or the financial director. Financial director. so also perform make an assessment. Make an assessment of whether the basis of calculating the allowance is reasonable. Reasonable and consistent. With the prior year. Make an assessment of whether the basis of calculating the allowance is reasonable and consistent with that of prior year. Right? Okay. So let's specifically say, what do we say? Included in the outstanding balance of more than. So we can say regarding, okay, let's just say calculations, recalculation. Just say reperform calculations with regards to reperform calculations with regards to the outstanding balance for more than 120 days. That's to the outstanding, that's to the outstanding. That's to the outstanding balance. Because reperform calculations with regards to the outstanding balance. For debtors, balance for debtors that are more than 120 days. That are more than 120 days. Since some have been left under business rescue proceedings, under business rescue proceedings, and liquidation, meaning some could should be written off. Okay. Reperform aging of debtors. Reperform the aging of debtors by selecting a small sample of debtors and trace the old amounts What amounts are back to the source document. In the source document. Uh, Data's, you can see, data's that are long-standing, and material. Should be identified and discussed with credit management. Credit management. Our question is saying, they said something. You have already performed all the applicable analytical procedures on data's accounts. So should not perform analytical procedures. Okay. Then inquire with the management. Whether they are the management, whether they are what? Inquire with the management whether there are any matters that might affect the allowance for bad debts. It's fine. The allowance, since we are dealing with the bad debts, that is allowance. Right. The allowance, yes. Maybe, yes. Just the allowance of the bad debts. Okay. Now we can say review. That's one review. All the reports given to management. All the reports given to management. Maybe, for example, on a monthly basis. That's it. Review all the reports given to management. Maybe on the monthly basis. On the monthly basis, with regards to debtors. Okay, how many marks can we get here? Maybe 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. We are not bad. We are better like this now. It's not bad.
Yes.
Yeah. I think this is all with regards to valuation of account receivable balances or data. These are the procedures that we need to perform in relation to evaluation. There are also procedures we need to perform in relation to existence, right? Something like that. In relation to completeness, in relation to classification, in relation to presentation of accounts. So we can go through those aspects also to understand. Because maybe they've asked it a question in this year, right? Uh, Specifically looking at the valuation. We can ask another time a question specifically in relation to existence, in relation to presentation, maybe in relation to completeness or classification. But there are sessions that got more information that we need to focus on mostly with regards to account receivable balance. It's this one of valuation. And also, so meaning that we're not dealing with valuation, remember, we're also dealing with accuracy and allocation. So the session that got a lot of information where we need to got a lot of procedures. Let's say there are sessions that got a lot of procedures, includes this one of valuation. And on valuation, we need to look at gross amount and allowance for doubtful debts or bad debts. There's this one of existence where we need to deal with subsequent testing and data secularization. But then we can also look at presentation. Yeah, right. Others does not have much information. So that is another trick we can do if we can see that in terms of time or maybe information, but it is good to understand everything. So in general, it's about understanding what really are we talking about if we are asked it. Really are we asked it to do? If we are asked it to perform or formulate substantive procedures in relation to the existence of the account balancing yeah, of the maybe yes account receivable account balance. Let's say it in that way. What actually are we supposed to do? Meaning that we need to do data secularization, something like testing, something like that. That is the best thing we need to do. Understanding the concept. So whenever, so because it doesn't mean that we are going to remember all the aspects or the way we were formulating these procedures in a class like this. So what is important is to understand the concept so that on your own, you can formulate the same substantive procedures, the same meaning, but maybe in different terms. That is the idea. Okay, because these guys, maybe they might not be limited in asking which assertions should we perform procedures on in relation to a class of transaction, in relation to disclosures, and in relation to account balance. They might not be limited. They can ask us to perform substantive procedures on any assertion with regards to account balances and disclosures and a class of transactions. So, for the sake of covering up much of our content, okay, we've dealt with this question. If I am going to find a question that has been asking about substantive procedures on the bank, that is EFTs, or on cash, then I'll present that question. But it is important that during your presentation, you also go to an extent that you revise the substantive procedures. How do you perform substantive procedures on the cash sales, on the so that will be made on cash. That is, what do we need to? How do we need to deal with that? The issue of EFTs. Also, which substantive procedures can we perform using computer assisted audit techniques? So then we will come back again to the issue of accounts receivable, dealing with all the assertion, and to understand which substantive procedures we need to deal to deal with, or we need to formulate or perform, dealing with different assertions of the account receivable balance. Then also coming back to the issue of a sales transaction that has been made on credit. Then come back again to the issue of test of controls. Then by then, we understand we have at least dealt with something in relation to a revenue and receipt cycle class of transaction. Because in a revenue and receipt cycle, or in each cycle, we can arise with a class of transaction or an account balance. So next time, I've seen another question paper, but it's got two questions that has been asking about test of controls on acquisition and payment cycle and substantive audit procedures. Also, I don't remember on which assertion with regards to the acquisition and payment cycle. So we'll do with those two questions in our next session. Then we will see if we will come back again on it on the acquisition and payment cycle, or we will need to jump to another cycle. Once we are done with this cycle, it is obvious that we will get two questions. One, we will be asking about test of controls. Another one will be, or two or another one will be asking on substantive procedures. So once we understand how to formulate substantive procedures and test of controls, we are much better. Then we will deal with other sections from there.
Okay, no, thank you so much with the class.